Hi everybody, it's Christian from Serene Education with the 4 majors and notes update for the 22nd to the 28th of February 2014. Just going to have a look at the 4 majors, starting with the euro against US dollar on the weekly. Let's have a look and see what happened the prior week. Just give us an idea what we could expect for the last week. So hesitation, you can see that the last 3 weeks, in fact, we've seen pullback. Price has been trading or had been trading below the 61.8, which is the fib extension, going into the latter part of January. However, you can quite clearly see that we had a bullish Arami. Price has now remained above the 61.8 for most of February, in fact. So seeing a bit of positiveness on the last candle before we saw last week's candle pretty much very, very indecisive. Now, indecisive in terms of what's happening in Greece at the moment. And a lot of hesitation. And if I drop down to the daily time frame, you can clearly see that hesitation and how it's actually played out over the past couple of weeks, in fact. So price not really making any new highs and not making any new lows. So ideally, we'd like to see price getting out of this consolidative range. Ideally, if we are to see any further negativity for euro, which is what we're seeing here on the indicator box, very, very negative trend, then ideally we want to see a continuation or return to the levels below the 61.8 level to start with before we see a continuation to the downside. The longer we see 61.8 acting as a support level and price remaining above this level, then we're more likely to see more bullish buyers coming into price, and then we could see price pulling back even more going into March and April. And there are certain areas around here we could look at potential targets. Roughly this one over here at 11623. Another area would be roughly around here at the 17920 level, and it starts getting a bit messy as we head into all that 50% fib retracement here at 11927. So there's more than enough on the table if we are to see any further pullbacks. However, it all remains to be seen what happens in Greece. That's the biggest talking point at the moment now, and I feel as long as we have issues with Greece, we're more likely to see further consolidation until such time as we actually hear a genuine outcome on that particular area. So looking for further sentiments here, ideally like to see a break of this consolidative range, or this what we've seen over the past couple of weeks, in fact over the last month, in fact, before looking at any opportunities. Trading within this range, you are putting a lot of more risk on the table in terms of any profits. Very, very speculative, and you don't really want to be trading that because you're not really getting any genuine return on time invested. So here, just be patient, rather wait for a defined continuation candle or pullback candle, and then trade the outcome. And that's relative to what happens going forward on what happens with Greece. So moving on to sterling. Last couple of weeks, exactly the same thing as euro. We've seen a pullback. Prices have failed to really move lower than the support levels that we saw back in early 2013, in fact. You can see price didn't quite make those levels as we broke through that going into the first part of the new year. However, subsequently, since then, we've seen pullbacks. And the last couple of weeks, we've actually seen price getting it back above that 23.6 fib level here at roughly the 153,125 and change mark. As long as she stays above that level, then ideally we look to see further pullbacks. You'll see the overall indicator box over here pretty much starting to look a bit indecisive. There's a lot of blue. You can see that if we drop down now to the daily, you can quite clearly see that there are no more swing lows. In fact, we're actually seeing the actual downtrend being breached. You can see that the 50-period moving average, in fact, was a clear resistance for price. That has now been breached. However, a lot of indecision has been the focus on sterling. We've seen some really, really positive figures for sterling. In fact, the start of last week, had some fantastic figures for sterling. However, we didn't see any continuation or bullish movement on the sterling US cross, primarily because of that hesitation to trade right now, because of the continued uncertainty on Greece. So here again, you can see that the underlying area of concern is still within the Euro group, within Greece. And until such time as we actually get a signal or an outcome as such, then we're likely to see price continue. So here again, patience. You can see that the candlestick is very, very indecisive. In fact, a lot of spinning tops. Prices failed to really move with any genuine sentiment at the moment. Now you can see that price support here at 155,059 and change. Prices failed to get above that. But as long as she maintains above this 23.6 here at 153, then we're likely to see price pulling back even further. So you can see the intermediate trend now swing high. We've seen a pullback over the last couple of days, Thursday and Friday in particular. However, as long as she maintains above the 23.6, we're starting to see more bullish bias coming into, and you can see that the indicator box over here, there's a lot of blue now compared to the red. If we see price getting back below the 23.6 level, then we're likely to see price continuing with long-term trend, which is in fact has been very, very negative over the past 9 or 10 months, in fact. So here again, consolidative, very, very messy range over the past couple of weeks. Rather like to see some sort of outcome with Greece that would then look to stimulate the market in either direction. I'm just waiting for a more defining candle movement, and then I'll look to trade the outcome. US dollar Swiss franc on the monthly. Here again, you can see that January, in fact, was quite an eventful month for the US dollar Swiss franc, in fact, because of the Swiss National Bank unpegging its currency against the euro. We saw a massive movement here, roughly in about 1900 pips. Price has been consolidative. You can see there was a blue candle, and we had a blue arrow, blue candle. The RMO was flat, and the OSMO has clearly been above and has been above since we failed to see any further lows. However, going forward, you'll notice that the indicator box over here, you can see that there's still a bit of positiveness on the bigger time frames, but a lot of negativity intraday. Go down to the weekly time frame, you can see, if I just look at the current high of that negativity, that negative candle, to the current low, I'm just going to change the color just to signify. There we go. You can see that the 50% retracement, we're actually trading higher than the 50% of this entire candle wick, and you can see the 61.8 level was targeted aggressively for most of last week. However, by the close of play of the last week in terms of Friday night, we saw prices putting that to the downside. Dropping down to the daily time frame, you can see quite clearly that Thursday we saw resistance at the level, and then Friday we see a pullback on the daily. So the overall candlesticks are still positive. The RMO is still above that zero, and the OSMO is still above the zero. However, we're not seeing any new highs, and subsequently we need to see price getting above the 61.8 here at 94958 and change, to then look at an aggressive target at around that 23.6, which is the monthly fib here at 9710, and you can see the other fib ratio is actually complementing that. So a lot of resistance above price here at that 9710. But in order to actually look at those as potential targets, we would need to see price this week or any week going forward getting above the 61.8 here at 94958 before we see any further continuation. Here again, be patient, wait for an outcome. It's relative to what we're seeing now in Greece and Eurogroup. We want to see the outcome of that, and I'm sure we'll see any further movement going forward. Last pair of the day is the US dollar Japanese yen. Subsequently, here, just starting in the monthly, you can see that we've seen a bit of bullishness this month, in fact, as it plays out. We've seen price over the last 2 months. In fact, December and January, a pullback. December, spinning top into that 61.8 monthly fib level. He had 119.83 and 6. Price traded above that level for a period of time. However, by the end of January, we saw a bearish engulfing candle. We saw a little low, but you can see a lot of indecision creeping into this particular pair. On the weekly, it's there to see. You can quite clearly see that we saw little lows. The candlestick, the prior week's candle, negative in itself, not breaking the prior. So here again, looking any further bias to the upside, you can see the weekly candle needs to break the current 2-week resistance level here at 119.12, but then we've got that monthly fib level. So here, if we are to see any further bullish sentiment for this particular pair, you can quite clearly see that prices will be making new highs, swing highs over the last year, in fact. Then ideally what we want to see is that 61.8 being breached, price to close higher. All that's needed then is a blue arrow to complement that, the OSMO to get above that zero level, and then we could target further highs. The longer price remains below the 61.8, the more negativity, the more selling pressure then comes on board, becomes more applicable, and we could see price returning back to the current support level low that we saw over the past couple of weeks, or the past month, in fact, around about the 117.098 and change. Thereabouts. So clearly we are to see any further negativity. This 117.098 and change needs to be breached before we could look for even further pullbacks, and looking potentially going into March and April, that 50% retracement level down here as our first potential target. So here again, consolidation, a messy range. In fact, if you go down to the daily, look at that, a lot of hesitation. Be patient, and soon enough we should get a definite marker in the sand. And once we get that, we're seeing that volume or that trading sentiment coming back into the market again, then we'll look to continue trading that. But until such time as that happens, rather be patient, bide your time, And when the market's right, then we start to trade. I'm going to leave you with that. I hope you have a fantastic week this week coming up. Please be vigilant. Just have a look at the fundamentals before you actually trade this week. There's a lot of GDP quarter figures for most of the big boys, the big pairs out there. Please keep it as simple as possible. Back up any trading with some sound money management rules and trade serenely.